And it's another trading day right here in Lagos, Nigeria. I'll be giving you what's playing out in most of the markets that we track. Here's what's coming up. We analyze partnerships between mobile virtual network operators and mobile network operators. What's next as MVNOs get licenses? As the Monetary Policy Committee holds interest rates in its latest meeting, we get reactions. Plus, the United Nations warns of rising demand for gold and mineral is fueling corruption and instability in Africa. And talking about gold and metals, let's get a check on how the prices are looking today. Right there, the trade, and we see it's a mixed picture with palladium. That's up 0.5%, $1,017. See platinum and palladium able to get above that $1,000 psychological level. They've been below that for the longest time now, but we're seeing a rise there. And spot gold, yes, it did start that rise, $3,293 per ounce, up 0.2%. U.S. gold futures, that's up 0.3%, $2,295 per ounce. And we see spot silver is not shining like the others, $39.99, 0.2% down. Let's get a check on oil. See, global oil prices, they moved up more than 1% earlier and still elevated at this time, 0.90%. That's for Brent, $65.97 a barrel. Trying to get back to that $66 level per barrel. Then we see WTI crude down a bigger 0.92% at $62.60 a barrel. So that's the picture there and the oil market. To other stories now, and that's on the back of the latest whole decision by the Monetary Policy Committee. I will see the economic think tank, Center for the Promotion of Private Enterprise. They've welcomed the decision of the Monetary Policy Committee to pause tightening of rates. In its latest statement, the CEO of CPPE, Dr. Muda Yusuf, explained that hiking rates was really not an option at this point, as there were concerns that both the cash reserve ratio and the monetary policy rate were already very high, which created difficult financing conditions for investors in the real economy. However, Mr. Yusuf says fiscal and monetary policy coordination remains a critical imperative for macroeconomic stability. He wants to see that handshake between the monetary and the fiscal side of things. And we see the Manufacturers Association of Nigeria, they're deeply concerned and worried about the continued decision of the Central Bank of Nigeria to maintain the monetary policy rate at 27.5% since November 2024. Despite a global wave of interest rate reductions aimed at revitalizing economic productivity and combating stagflation, the body believes that when most progressive economies are charting a course towards industrial recovery and macroeconomic stability, Nigeria's monetary stance tends to lead us in a different direction. Over the last quarter, countries such as members of the Euro area, United Kingdom, Denmark, Australia, China, India, Thailand, and Egypt have implemented interest rate cuts to bolster economic growth and support the productive sectors. We'll drill down on this latest decision later on the show. Then we see Nigeria must still be struggling with financial inclusion and adoption of digital payments, but the president of Fintech Association and the CEO of Zest Payment, Dr. Stanley Jacob, believes that an impressive level has been reached, although a lot still has to be done. He was a guest earlier on Business Morning. Take a listen.
I feel that the stories around our digital payment success is grossly undertold. Because when you look at what the numbers are saying, you take electronic payments, for example, between 2019 and 2022, just 3 years space, we had about 300% growth. in electronic payments, and that took us to over 380 trillion in payments. 2 years later, at the end of 2024, we did 3x that figure, and for the first time, we recorded payments exceeding 1 quadrillion in value. I can tell you that many Nigerians never heard of those kind of figures before, in quadrillions. So it wasn't just a victory for payments, but also for our education and literacy. I got to hear that for the first time too. Secondly, when you look at cash, globally, Nigeria has recorded the steepest decline in cash usage across the world. We had about 59% decline in cash usage when you look at a 10-year span between 2014 and 2024. When you move to financial inclusion, a final report in 2023 says we are in 64% included, down from 56% included, as in terms of exclusion going down. It might look like a small delta, but when you look at it carefully in terms of the initiatives and execution, the impact is very huge.
All right, so it's official. Interest rates stay the same in Nigeria, just like last time, but still elevated at 27.5%. Organized private sector saying, cut the rates now. We can't run a business profitably with high cost of credit, but the MPC needs to tame inflation. Let's talk to Dr. Victor Obonaz, the Director, Monetary Policy Department at the Central Bank of Nigeria. Great to have you on the show, sir.
Thank you very much, and good afternoon.
Good afternoon.
Viewers. Good afternoon, the anchor.
Yes, good afternoon. So, definitely it's another hold as expected. Is consensus at this point from, market participants and economists and experts. They believe that the MPC was going to hold rates, and it did happen this time. But we're getting mixed reactions, so far. Some have, lauded this hold stance, but, organized private sector, they're saying the rates are too high, that they cannot do business, at this rate and actually make a profit. And the cost of credit is, crushing their businesses at this point. So, talk to me about this latest stance, and is there any way to consider organized private sector at this time?
Thank you very much once again, and I would like to thank you for the opportunity. The Monetary Policy Committee at its 300 meeting yesterday decided to retain all the rates. And this decision is derived from the analysis that were done across global and domestic economic environment. And the decisions were hinged on 2 or 3 major considerations. The first one is the fact that there have been progressive improvement in some of the key macroeconomic indicators. And so there was actually no need to hike further at this point in time. And if you watch those indicators, we have actually recorded, substantial stability in our exchange rate market. Also, if you see the trend of inflation, it is moderating gradually. And also, we can see the measures of inflation, especially food, maintaining a consistent decline since the beginning of the year. These are comforts and should, give the MPC the opportunity not to hike. The second point is the fact that there have been consistent hike in the past until the last MPC meeting. And given the need that monetary policy, sometimes decisions, they transmit with a lag, there is the need to allow some times so that the impact of the previous hikes should permeate through the economy. And that was another reason that was considered. The third reason had to do with global considerations. We are all aware of the shocks that is coming from the global angle, and that has to do with the US trade policy, and the retaliatory tariff measures that have been ongoing from major trading partners of the United States. And they give some concern in terms of the uncertainty of the policy direction of key economies across the globe. And so there is the need, because of that unclarity of policy, to have a pause and treat with a cautious approach to be able to know when the coast is clear,
right,
to take clearer decisions.
All right, Dr. Bo, but considering what private sector, organized private sector is saying right now, that they cannot grow their businesses, in this high inflationary environment, is the MPC concerned at all, about the cost of credit and, businesses not able to take loans at these rates?
Certainly, the Monetary Policy Committee is concerned about the high level of inflation. And of course, that is why they have decided to stay the course, to be able to, stay the course to a point that moderation can be more rapid than what we have. What we are trying to do is to create a better and an enabling environment for the private sector. The private sector practitioners are also aware that they cannot do business in a state of high inflation. Inflation does no one good. And so what we want to do is to ensure that the Monetary Policy Committee, attack inflation headlong, deploying all the tools that are necessary at this time to see that inflation is brought down for the business community to be able to carry out their businesses. And it might interest you to know that a country like Ghana in March had its inflation moderated downward, yet the hike rate, I think by 100 basis points. But in our own consideration, the MPC in its wisdom felt that it is also important to hold at this point in time, so that even businesses that are complaining of high cost of credit should be able to stabilize a little. And as we watch development in inflation, if we are able to achieve some moderate level of inflation in the near future, why not? The essence is that MPC will be able to consider the data that is available at that point in time. But for now, it is very important to stay the course and be committed to ensure that inflation drops to a reasonable level, which is a win-win for all stakeholders.
All right, so is the MPC, really, really confident about the inflation, trajectory we're seeing right now? We've heard some economists actually show some concern about, the latest data, that's for the rebased inflation baskets, and, how, they feel like sometimes the data might not actually be reflecting what's really going on right now, like, the guest I spoke to yesterday. Does the MPC have any concern about the data?
Well, the Monetary Policy Committee, and indeed the Central Bank of Nigeria, as you know, we are users of data. We don't produce data. That is the statutory responsibility of the National Bureau of Statistics. And we have confidence in whatever official statistics that is released by the Bureau. And so whatever data is given to us, that is what we analyze and we use.
So at this point, is the MPC confident about the inflation trajectory, going forward? Do they see light at the end of the tunnel when it comes to taming inflation?
The MPC is very, very hopeful. And the positive outlook for inflation is because of what we have seen already in terms of the stability in the FX market. It gives some comfort. You can see that the price of PMS, which is a major contributor to inflation, is trending downward. It's also a major consideration. The price of food items is also trending downward. So the outlook is positive. And that is why the MPC wants to stay the course and ensure that we are able to achieve moderate level of inflation within the shortest possible time.
Volatility we see in the global oil market, do you think there's some hope on the horizon that we'll be able to diversify, that the government can diversify the revenue sources, in the short term, seeing that oil prices are kind of pressured at this time?
In the fiscal sector, a lot of reforms are happening. And if you look at the numbers, you will agree, particularly the Q4 GDP figures, you will see some substantial level of diversification away from the oil sector. Yes, it is true that the price of oil is declining at a worrisome level. But however, the level of security that have been able to achieve, that have been achieved in the South, in the oil producing, areas, will be able to compensate in terms of output now, to compensate for that drop in oil price. That is one. The other aspect are the diversification, like items like urea that, have started being exported, and other non-oil produce, other non-oil items have also enjoyed some exports. That is going to help to augment whatever loss that will come in. The last point that I need to say is even the increase in mobilization of domestic resources, that now the government does not wholly depend on revenue from oil. Tax reforms and the rest of them are going to help to be able to improve revenue in the fiscal space.
All right, thank you so much. It was great having your perspective today, and definitely we're looking forward to the next meeting to see if things change a lot, before then. Thank you so much, Dr. Victor Obo. He's the Director, Monetary Policy Department at Central Bank of Nigeria. Thank you for coming on today.
Thank you, it's my pleasure, and thank you very much. Thank you, Nigerians.
All right, now to our next conversation. We see as Africa's digital economy accelerates, the demand for seamless, scalable, and secure connectivity is reshaping how people and businesses interact across the continent. At the heart of this transformation is Esims, embedded SIMs technology, a breakthrough poised to redefine mobile communication, unlock new economic opportunities, and enhance regional integration. Joining us to unpack this, we have Dr. Ben Adeni, is the founder CEO Universa, joining me right here in the studio. Great to have you.
Great to have me. Thank you so much.
So, talking about eSIMs,
Yes.
at this point, some people might not understand the technology.
Okay.
Talk to us about how it works, because I remember back in the days, when we started having the mobile network operators, I know a SIM card was going for as high as 50,000 naira, and it was like physical. You could see it, and we've been seeing it for the longest time.
Yeah.
So what is it about the eSIM, embedded SIM technology?
Okay, maybe I can start from where the physical SIM card, started. It started in Germany in 1991. It's a very big size. It's as big as the size of an ATM card. Then gradually it became, smaller, which is what we call, the mini SIM card, the micro SIM card. Now we have the nano SIM card.
Nano, yeah, very tiny one.
The very tiny one. So now, technology now became advanced such that we now have the copper area of the physical SIM card being embedded inside the motherboard of the phone, which is what is called Esim, embedded subscriber identity module. So that's what the Esim in technology
so it's gone from big, small until it disappears.
Yeah, literally. Because if you still open the phone, you will still find the eSIM there. You still find the physical SIM card embedded on the phone. Yeah, of course, technology will continue to advance, and we'll have something like iSIM, which is integrated SIM cards.
And I'm sure AI will have some kind of role.
A lot of
definitely, in that. We keep seeing technology improve so far. But, talk to me, are there any regulatory challenges, when it comes to this technology, or is it just smooth sailing?
It's not smooth sailing, obviously. There are technology challenges. Number one is the compatibility of the devices. Okay? Um, it's not all phones that are compatible with eSIMs. Yes, we see, some phone manufacturers and OEMs are shipping out devices that are eSIM compatible.
Because I know the price of phones now are not funny. Phones now, the very good ones, for those that love the high end, you're spending like 2-3 million naira.
Yes.
Due to weakness, with the naira. So I'm guessing this kind of phones will be expensive.
So the costs variation is not that high, but yes, because the OEM are adding an eSIM there, obviously it costs some dollar extra, to ship them to Africa. And statistics has also shown that about 45% of all the smartphones that ship to Africa in 2024 are eSIM compatible. So we still have a long way to go with having our devices eSIM compatible in Africa.
Right, and talking about a long way to go, I know a couple of MVNOs have licenses now to operate. That's mobile virtual network operators.
Yeah.
And there's some kind of, I believe there's some kind of handshake between the MVNOs and the MNOs, the mobile network operators. That's the ones we have, right now, the big four.
The big four, yeah.
At this point. So how is that going, at this time?
Okay, so in 2023, the regulator brought out a framework which led to more than 40 companies, successfully acquire the license of mobile virtual network operator. And what is expected in that framework is to work very closely with the MNOs. Okay, the MVNO license do not give spectrum license. It simply means that we can uptake some of the voice, SMS, and data services of the the mobile network operators, so that there will be some kind of a relationship between them.
That's the likes of MTN, Airtel,
yes, and Glo. Yeah, those are the MNOs. So we call them host network. So, and the MVNOs are the partners, in this regard. So the MVNO framework is meant to be like, you have your own brand name, okay? Say, just call it another network name. But your host network is what will be driving that connectivity at the background. And Nigeria is not the first. In fact, it's coming so late because MVNO framework and implementation has happened in America, in Europe, for about a decade now. So yes, we have a lot of learning from there to really make our own successful.
So do the MVNOs, do they make maybe voice and data, do they make it cheaper, or what value do the MVNOs bring, to this value chain?
So MVNO bring value-added services. MVNO bring deeper penetration in terms of connectivity. So an area where an MNO is not covered, you see an MVNO going to that area.
So it's like the banks and the fintechs?
Very, very similar.
Okay.
Very, very similar. The difference is that the fintech still has a way to, to have the interchange happen, with the likes of NIPS, which is like a separate entity. But for MVNO, is a bit different. The MVNO are closely tied to the MNO. Without the MNO, the MVNO will not be able to send or receive any call or even transmit data. Okay. So, however, with the fintech, you can still, you can send and, you can send payments within the same subscribers of the fintech. All right. Just go run through the names and come back to the, to another subscriber. But for MVNO, you just have to go through a radio mast, just have to go through a cellular network. And the people that own the cellular network today are the MNOs.
Right. And, talking about the MVNOs, and you said they'll have a separate brand, and
Yes.
they use the hostess, architecture and all of that
Yeah.
to operate.
Yeah.
But it's been a while now.
Yes.
I don't think I've seen any MVNO out there doing what they're supposed to be doing. Is that normal?
Well, it's maybe seem normal. It may also be seen challenging. One major challenge you have is the capital. It's capital intensive, and it's expected that anyone going into that space must have deep pockets, if you want to say. And the other challenge could be, of course, compliance to the regulatory, policies and procedures and things like that. Yeah, and the other challenges that the MVNO may be having is the integration with the MNOs. Okay, that is very important, particularly if the MNOs are not really ready for an MVNO integration. It will take time.
Right, so we should wait for the big boys to allow the MVNOs to come play, at this point.
Practically, yes.
All right, so, with this whole technology trend that we're seeing in, the communication space, what other trend are you seeing right now that you think is, shaping the way we communicate in Africa, and making it easier, for us to talk to each other?
I'll mention the Internet of Things. It's not there yet in Africa, but it's coming up. Internet of Things, IoT, is simply a network of devices that are connected over the internet. And in Africa, I see that a lot of interest from both the government, and the individual. For instance, in electricity, the electricity distribution companies now are engaging IoT devices which are powered by Esim cards. Yeah. So that whenever there is a short circuit on the circuit breakers or something trip off, they could be notified at their head office. And that is being driven by a technology under IoT called SCADA. SCADA is supervisory control and data acquisition. So whereby these electricity companies are able to install all those sensors around their facilities, and they can sit and watch on the mimic board, and they can see all of those triggers happening from the field. So it's really hate prompt responses when things happen. Another example of IoT, which is really coming up, is in water distribution companies. So there's a lot of valves, there's a lot of pipes, running of tanks and things like that. So the water distribution company need to know what is happening, because where the treatment plants are always very far from the city. So they always have this mimic board also, very similar to the electricity company, where they need to monitor in real time what is happening. And it even go beyond monitoring. It also include control. And so the whole value chain, the whole experience is powered by an IoT-driven devices. And Esim is really taking that stage. Yeah.
All right, we'll keep tracking the growth of the Esim technology, and definitely see adoption, how that grows around the continent and right here in Nigeria. I want to thank you, Dr. Ben Denny is the founder and CEO of Universal. Thank you for joining us today.
Thank you so much for having me. Thank you.
All right, we'll take a break now. When we come back, we'll head straight to the markets. Willie Bong will tell us who's making money and who's not. That's in a moment. Just stay with us. All right, let's head straight to the markets now. We have Willie Bong with the details. Great to have you, Will. So, who's making money?
Okay, I think those in the banking sector right now are probably, cashing out from, especially with the news, Fidelity Bank, we had that, and the banking index dropped yesterday, but we see it picking up today. So let's just see that.
Yeah, because we know investors don't play with news.
Yes, they don't play with the news.
Yeah,
they don't play with the news.
They act.
They act.
Right.
But I think some people are taking advantage, bargain hunting, maybe stocks drop, and then you see them pick it up. But GTCO went as high as 71 Naira intraday today. That's a high for them.
And consumer goods, is that still shining? I know
well, of course, I have not really checked, but I'm sure consumer goods is doing. They've been doing very well. You saw Nestle gain about over 100 Naira yesterday, and Nigerian breweries about, 13 Naira. It's just doing, although 2 Naira for Nigerian breweries, it's doing so well that I'm just, you were wishing wishing you were there, but
Yeah.
unfortunately, Ladi,
Yeah.
unfortunately.
Investors don't get everything.
You don't get everything. Well, let's check in on major stock markets we track in Africa. It was looking green at intraday. Nigeria's NGX was trading up at intraday by 0.09%. The banking index is currently in the green after recording declines in the last 2 trading sessions. GTCO, as I mentioned, is currently up 130 basis points, intraday high of 71 naira. JSE in South Africa looking good, 0.85% at intraday. Egypt, let's look elsewhere. You see Egypt also doing not so badly, 0.36% at intraday, but the Nairobi Securities Exchange closed Tuesday's session in the red zone. That's the first for some time now, but I hope there's a turnaround before the close of business. But let's zoom in on what's going on at the Nigerian Exchange. Let's get insights from Oluwatobi Adesanya, equity trader, Zcrest Securities Limited. Good afternoon, Toby. It's good to have you on the show.
Das ist im zweiten Text.
Toby, can you hear me? Can you all, okay, good afternoon. Can you unmute your mic? Great, very great. We saw the ECB and the Central Bank MPC hold rates yesterday in line with expectations. There's been movement, positive movement in the market, but not significant. Why do you think this is?
Well, danke dir. That was an expected move.
Okay, so thinking that we're still trying to get Toby. Okay, Toby is on now. Well, Toby, can we hear you? Thank you.
Okay, can you hear me now?
We can hear you loud and clear. Go ahead.
Okay, good. So, I mean, we saw the MPC hold rate as 27.5% yesterday, and that was expected from them. So, and we have not really seen that affected the market in a negative way, but rather we can interpret that to mean that things are getting better gradually in the economy. Because looking at inflation numbers, for example, inflation reduced to 23.71%. So there won't be any reason to hike rates. So it would be nice for them to hold it and observe the economic indicators. So coming down to the stock market, that kind of signal a better economic indicator, like I mentioned, a better economic performance. And we expect that to also filter into the companies we have on the exchange. So on the contrary, I mean, we are seeing a lot of investors' interest, investment sentiment positively in the market. We are seeing more demands across sectors.
Okay, so right now, the reaction in the market post-MPC, that's the normal thing we should see because investors probably have been expecting this hold, so there's no need for any drastic or knee-jerk reaction from investors. Is that what you're saying?
Yeah, so I would say it's more like investors have already factored in their expectation that they are going to hold rates, and when the rates were held, so it was so there was no need for the news to move majorly in the market.
Okay.
So, but if it were to be that the hiked rates, so then we might start seeing investors react to that.
Okay, or the cutting rates. Now, like the private sector are demanding a cutting rate. But let's look now. The things have been buzzing in the market. There's news. Fidelity Bank is out there. We all know this issue with the legacy matter and the disputes with a private company, a small company actually. But this matter has been, there's been allegations of bankruptcy for that bank right now. But we also see in the news that the CEO of Fidelity Bank has also increased a personal stake in the bank. But what does this, speak? According to sources, we see that she acquired about 18 million shares valued at over 366 million. So how should investors interpret the CEO's new purchase done on the very day of this misleading bankruptcy information, because the CBN has come to reassure the public Fidelity Bank has debunked the news as false. So what does it speak about Fidelity's position in light of the ongoing court case application and CBN's reassurance to the public?
Okay, I would say it speaks to increasing investors' confidence. Despite the negative news, of course, the bank came out to do a press release, and CBN also assured the public that there is no issue with the bank, and the bank has cleared the air, that there's nothing of bankruptcy. So for the directors dealing that we saw on Monday, where we saw the director acquire the 10 million units of the shares additionally. So it just speaks to increase in investors' confidence that if a director who still went ahead to acquire such large amounts of units, so it's just signaling more confidence for investors. Yeah, and if we look at their financials, even in Q1 2025, so we could see that their balance sheet size increased to about 10 trillion. And over the last few months, we have seen the stock performance as well. So it has been on the increase. So it's just signaling investors' confidence. And as of this morning, when the market opened, Fidelity Bank was the most traded stock in terms of volume and value. So at some point, we became the most traded stock in terms of value. So which means there are still investors that are interested in the stocks. You know, of course, you'll be selling some that would want to sell off to take profits. Probably they bought during the public offer that was held last year. So in as much as that might happen, there will definitely be a lot of investors interested in still buying the shares.
Okay, so we're looking at it now. Fidelity Bank is, the ongoing efforts by the bank to clarify the actual liability from the legacy disputes and the claim that the judgment amount was misrepresented. Is this a case of a test of legal interpretation, or is this a test of the financial stability of the bank right now?
So I would say, as stated in the press release by Fidelity Bank, that based on the last court hearing that was aired, so no individual was permitted to bring the issue to the public, and it is part of what they are also addressing at the present moment, as stated in the press release. So it was not supposed to even come out in a negative way. So, and they have come to declare that the news is false.
Okay, so we'll see investors' confidence, because I think the the purchase of shares by the CEO could be considered as a strategic move. Is that it right now? We'll
Yes,
see to
exactly.
reassure investors that the bank is still stable, there is nothing going on, and there should not be a run on the bank. Is that it?
Yes. Yeah. So, and I would say it is just a phase. And definitely, when investing, it's also important to look at the fundamentals. Of course, we have heard the news, and we have also heard the bank come to say that it is false. So that's on the news part. And if we even look at the fundamentals part, so we all know it's a company that is big on good fundamentals. Okay. So we should not neglect that part too.
We will not neglect the fact that Fidelity Bank has posted very good earnings report, and then investors should not be scared. But we're seeing the price action on the stock at intraday. It was down. Fidelity is in the red. So do you see investors bargain hunting, buying the stock and boosting it back in the green zone?
Yes, I would say yes. Like I mentioned earlier, see, even if we are seeing a lot of people want to sell, there will still be a lot of people that want to buy, because they will see the price reduction as an opportunity to enter into the stock.
Okay, thank you so much, Oluwatobi Adesanya, equity trader, Zcrest Securities Limited, for your time on the program.
Thank you so much for having me.
So we'll just go very quickly to the Middle East and see the sentiments there. It was mostly lower at intraday. Very quickly, we see Dubai trading down 0.44%. Abu Dhabi also down 0.35%. Elsewhere, still within the region, we see Saudi and the Qatari indexes trading in opposite directions, 0.63% and 0.08%. Let's look at stock futures. In the U.S., it took a hit early on Wednesday as the rising treasury yields rattled investors once more. We see futures for the Dow Jones dropping more than 400 points, nearly 1%, and the S&P 500 and Nasdaq futures also dropping 0.7% each. Bond yields were back in focus. The 30-year Treasury yield rose above 5%, while the 10-year note climbed past 4.53%. That surge follows a recent downgrade of U.S. debt by Moody's late last week. Investors are watching Washington, where the Republicans, the lawmakers, are still ironing out a tax-cutting budget bill, but disagreements over state and local tax deductions are slowing progress. And this comes after a rough day on Wall Street, with all major indexes posting losses. Let's get highlights of Tuesday's performance with our correspondent, Maria Bird.
The U.S. stock market fell on Tuesday as the Dow Jones was down at 0.27%. The S&P 500 was also down at 0.39%, snapping a six-day winning streak. And the heavy-tech Nasdaq also closed down at 0.38%. Many investors are a bit concerned that there has not been any concrete trade deals, as they are not sure if this 90-day hold the president has put on tariffs could be something that could be helpful in the long term, as they're waiting to see if there will be any more of an escalation in the relationship and the potential trade deal between U.S. and China, as there has been cooling over the last few days. It is clear investors are watching to see if anything will come out of this in the next few days and weeks ahead, as they are hopeful that the U.S. stock market could show a rebound if there are some concrete trade deals.
Thank you, Maria. Now let's look to Asia. Now, markets across the region mostly closed in positive territory today, Wednesday, even as Wall Street paused after 6 straight days of gains. Japan's Nikkei 225 was the exception. It slipped over 0.5% to see 0.61 down, closing at 37,298 points as exports dropped for the second month in a row. And that slowdown is being blamed in part on U.S. President Donald Trump's sweeping tariffs. But elsewhere in the region, it was a more upbeat session. South Korea's Kospi rose 0.91%, and the small cap Kosdaq there also jumped more than 1%. Hong Kong's Hang Seng Index added about 0.62%. See there, 0.62% on the screen. Shanghai Index also climbed 0.47%. Investors are keeping a close watch on global trade developments and economic signals out of the U.S. and China. Nifty 50 in India is also in the green, so the market is not doing badly in Asia. So, Ladi, a lot of things to unpack there.
Yeah.
You know, where we see the downturn in most of the markets, in part they're blaming Donald Trump. Donald Trump is to blame for everything right now, so let's blame it on Trump. Whatever happens, please just put it on Trump.
Whatever you can put the blame on me, that's the song,
yeah, that's
right?
the song,
Well,
man.
I guess by the end of the day, you know, investors are very sensitive. You
Of
know,
course.
they're sensitive to information, news, and all of that. And you know, when there's bad news, we know some investors
Of
run to
course,
sell.
of course.
But as Adeni said, once one person is selling, another person is buying. Yeah, that's it.
Definitely.
Thanks so much, Will, for giving us those details there. But let's head over to Europe now, where Lars Holter has an eye on markets there. Hello, Lars. Great to have you.
Hello, Lottie. Good talking to you.
Fantastic. What are investors focusing on in markets in Europe now?
Well, actually, I see you got quite a mixed board here. Let me add a little bit of a red color to that.
Nice.
We are seeing the FTSE 100 in London down, the CAC 40 in Paris down, and the same can be said for the DAX over in Frankfurt, down pretty much all day. But this is really just still like we had yesterday, pretty similar situation. We're dealing with record highs. You have just around 24,000, a mark that the DAX passed yesterday for the first time ever. And now it's just struggling a bit to hold this mark. But again, this is a record high. Now, the interesting thing about it really, Ladi, is that no data really is backing up this kind of strength. And you wonder, why are we even at this record high? Now, we have 2 reports coming out today that raise questions too. One comes from the European Central Bank, and it states that the ongoing trade conflict between the US and pretty much the rest of the world is likely harmful to the EU economy. Well, that's not really surprising at all, of course. And the other report comes from Germany's Economic Advisory Panel. They just gave an update on the German economy. And to put this in context to markets, the experts on the panel are also seeing that markets have essentially decoupled from economic reality. But they say that obviously markets are looking at the future, and with the right policies, the future in an economic way might be a lot brighter.
All right, let's have a closer look at the Economic Advisory Panel now. What are they saying about the current and future state of the German economy?
Well, Ladi, first of all, they've lowered their growth outlook for Germany. Their last prognosis had stood at growth of around 0.4% for this year. Now they're expecting 0 growth. That's, of course, what we've already heard from some other economists. The panel now says, let me quote the chairwoman here, Monika Schnitzer. She just said in a press conference moments ago that the German economy will be significantly influenced by 2 factors in the near future: U.S. tariff policy and the fiscal package. Obviously, the first one is out of the government's hands. Trade is done at an EU level, and honestly, even in Brussels, they don't really know how to approach Trump and his ever-changing tariff ideas. The other factor, however, is very much in the government's hand. The economic advisors say that a 500 billion euro special fund for infrastructure investments can lead to production growth of up to 6% over the next couple of years if the money is spent wisely. They specifically say we need to see real investment here in infrastructure, in education, in future technologies and businesses. Then this could pay off handsomely. Whereas they're also warning that just spending these extra billions on, let's say, already planned projects or on pet projects would really not pay off. It could actually lead to a slight drop in production.
So the economic advisors, do they have any more points for the new government?
Yes, there were a few more points, although they are not all entirely new. But the advisory panel looked at how to cut down on bureaucracy, for example. Has been talked a lot about over the last couple of months, even in the campaign leading up to the last election. Now, the point is here, how do you cut down production, for example, while keeping enough in place to keep regulation there, which, of course, often has to do with safety or such matters. But, you know, looking at investments, for example, the advisors say the approval process in Germany has to be sped up, cutting down on bureaucracy there in particular. Also, that Berlin needs to get rid of the idea of checking every detail of every project and have such a strict no-risk policy, since it just really slows down construction, it slows down investment, and there are often smarter ways to approve things. Also, the experts want more research into how AI could help speed up government processes. So quite a lot of topics they touched on, and right after the press conference that I just attended with them, the panel was off to meet with the new chancellor. So let's see how much he and his government team will actually make happen.
All right, I guess it's a wait and see at this point. Thank you so much, Lars Holter, for the details.
Thank you, Ladi.
All right, so other stories now. A new report from the United Nations Office on Drugs and Crime, that's UNODC, warns that surging global demand for gold and other critical minerals, that's driving a wave of crime, corruption, and instability, particularly across Africa's mineral-rich regions. Released recently, the report titled Mineral Crime, Illegal Gold Mining is part 2 of the UNODC's global analysis on crimes that affect the environment. It highlights how the booming minerals trade is increasingly exploited by criminal networks, detailing the key drivers of illegal mining, cross-border trafficking of unprocessed minerals and metals, and the flow of illicit profits. The findings underscore the urgent need for stronger regulation and international cooperation to safeguard mineral supply chains and curb environmental and social harm. And we see Ghana has settled 90% of its $75 million debt owed to Nigeria. That's for gas supply, according to sources familiar with the matter. The payments totaling $65 million were made to NGAS, a subsidiary of the Nigerian National Petroleum Gas Company Limited. They detailed that Ghana remitted about 3 installments, about $37.5 million, followed by 2 payments of $15 million each between February and April. All right, let's get a check on what's playing out in the markets now, starting with Bitcoin and Ethereum. See the color at this point. If you follow what's happening with the markets at this point, we know it was mostly red before, but we did see that big jump there from Bitcoin, Ethereum. Massive jump there, jumped to about $107,000, but we did see a retreat right there in the crypto space. But we'll see the fear greed index talking about how investors are feeling in the market. They're still quite greedy at this point, according to the fear greed index at 70 points. Let's look at the top headlines in the market now. I'll see large Ethereum investors have added over 1.4 million Ethereum to their wallets. That's between mid-April and mid-May. This aggressive accumulation occurred just before Ethereum's major price rally, sparking renewed bullish sentiment in the markets, and that's according to an analyst, Crypto Rover. Wallets holding between 10,000 and 100,000 Ethereum increased their combined holdings from 15.8 million to more than 17.2 million Ethereum during the period. Then we see Ethereum co-founder Vitalik Buterin is weighed in on a recent discussion sparked by Succinct Labs co-founder Umar Roy, who announced the successful demo of a full zkVM proof system for the ecosystem's execution layer. Then we see Trump, that's the meme coin, is up 13% over the past day and currently ranks as the market's top gainer. The double-digit gain rally reflects growing investor enthusiasm ahead of tomorrow's dinner, which has attracted widespread attention from the crypto community. Well, joining us now is Femi Adegoluza, co-founder at BChain Africa. Hello, Femi.
Hi, Ladi. How are you? It's been a while.
I'm doing good. Yeah, it's been a while, and great to see you again. So, Femi, I hear that the holders of Trump's meme coin have a pass to have dinner, with the president. And I'm wondering, are you attending that dinner?
I'm currently in Nigeria. I'm not attending any dinner, but I think it's actually very good utility for the holders of the Trump meme coin, which is actually a politically classified meme coin for the industry. And yeah, so if there's a surge, of course, it's expected because people are going to buy more so they can actually get access. That's how it is.
So I'm guessing because most of the time, influential figures, they kind of release some of these meme coins, that are supposed to be something from them, and they don't really do well, most of the time. Is President Trump's meme coin is it the game changer?
Well, Trump is literally the most powerful leader in the world politically, and for a lot of influencers, for me, I will say this clearly: I'm not a fan of meme coins without utility because they end up sucking liquidity from the entire crypto space, and it doesn't really make a lot of sense because a lot of people get hurt along the line, and they have a very bad narrative around what crypto should be and the other solutions that crypto provides globally in terms of remittances and stable coins like CNGN, for example, makes it very, very hard. So sometimes the meme coin frenzy can be a little bit overemphasized. So, but for Trump, I think adding that utility and having people to have that access to his, exclusive dinner makes it, very, very viable. That's the reason why Bitcoin has so much value. And that's because of the, utilities behind Bitcoin and also Ethereum as well. So yeah, for real, the influencers who are creating meme coins should actually put a stop to it. If they have no good plans for a long-term, holder, I think that's actually not going to help the crypto space in any way possible at all. Thank you.
Right, and I'm wondering if Melania Trump's meme coin might have a say in any of this, but we'll definitely find out. Well, how are you seeing price action so far in the market?
Well, you see, I think the charts look very bullish. To be very honest, Ladi, this is actually one of the most unpredictable markets in the entire crypto history because a lot of people were expecting, January when Trump came in, like the market is going to really become very bullish, and the bull run is going to be here, and a lot of people are going to make a lot of money. And it turned out to be different. I think that the launch of the Trump meme coin actually was a major factor to that. Then February became very bullish. In March, it looks like the market crashed so bad from 110K, which was the all-time high, to about $70-something thousand. So I think the charts look bullish. In the next couple of hours, we might cross another all-time high again. It might be hours, it might be weeks, it might be days. But looking at the trend, I think in the next couple of weeks, in the month of June, July, we might have some very bullish trends. I see Bitcoin crossing over 130K, 140K upwards. I don't want to be too bullish because I think any kind of like tariff war might just come again and make the market look like the experts don't know how to predict what they're predicting. But yeah, I think the charts look bullish, to be honest, and yeah, I see a lot more of pumps coming up in the next few days and weeks. Going into the month of July.
Right. It seems it's not wise to get too comfortable in most of that bullish euphoria because you could just get one word there and everything just changed. Thank you so much.
Exactly.
Thank you so much, Femi Adegolo. It was great having you today.
Thank you very much. All right.
All right, so that's the markets, and that's how major markets we track in Nigeria, and most of the world are looking today, and definitely tomorrow again we'll see what's driving sentiments right there in most of those markets that we track. Thank you so much for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.